Hey traders, Jason Leavitt, Leavitt Brothers. Hope you're well. Before I get started in this video, quick reminder, I put together a mini masterclass in trading. It covers a lot of the stuff I wish I would have known when I was getting started. It's great for beginners and it's just as helpful for advanced traders who need a little reminder of key concepts. Check it out at the link below. All right, so in this video, I'm going to talk about the importance of looking at a bigger time frame. Often a trade won't look very appealing on one time frame, but if you back up and look at the bigger picture, it looks much better. Or a stock will look very extended on a time frame, but on a bigger time frame, the move is just beginning. So in the examples I show in this video, I use the daily and weekly charts. You can just as easily use the 15-minute chart with the 60-minute chart or a 60-minute chart with a daily chart. Whatever time frame you use, it's helpful to look up one time frame to get a better perspective. All right, let's go through some examples. All right, here's Vista Outdoor. It looks okay. Stock moved up, moved down, kind of big moves on a percentage basis, and then it popped up here. Now it jumped, big volume, consolidating at a higher level at a multi-month high. So on this chart, on this time frame, it doesn't look too bad for it to move up with force on volume, consolidate in a range. It looks like it could break out and go a couple points. Okay, that looks like the limit. Okay, just a measured move up a couple points, which would be a great move for a stock that had done poorly previously, and it's just a retail stock. It's not like a growth company. All right, so let's look at now. This is the daily chart. Let's back up and look at the weekly chart. So here's the weekly. Now things are getting a little bit better because now that breakout is from a pretty wide base. Okay, so on the daily chart, it looks like, hey, maybe it can move up, 1 to 2 points, be a nice move. On the weekly chart, it shows a brand new breakout from a base that goes back, what is this, about 18 months or so. And if you get a measured move from this goes much higher. Okay, so the daily says it looks pretty good. The weekly says it looks really good. A volume breakout here from a big base. That says the move is just starting. It doesn't say the move is like in the last leg or two. So this is then what happened. It did this. Okay, so if I redraw that base, it was in here, and then that consolidation pattern was there. So it didn't just go up a couple points. It actually more than doubled. Okay, so what looked like it had small potential on the daily actually looked like it had bigger potential on the weekly. All right, another example. Here's Lumber Liquidators. Really hard. I mean, the stock's obviously doing well. It went from 4 over here to 14 over here. That's a big move. There are some volume bars in here. Okay, everything looks good. Stock is strong. It's trending up. It's above all key moving averages, shorter term and longer term. Looks really good, but it also looks kind of extended, and it's not, playing a breakout from that pattern isn't too exciting because maybe you get a measured move up for a couple points. I'd use like a move from like here to measure up. So a move from like 12 to 14 measures up to 16. It's tradable, but it doesn't look that exciting. Okay, but if I back up and I look at the weekly chart, this is what we see. That steady move took out that high, that high, that high, and now the stock is consolidating just under that high there. Okay, so I'm thinking now, so when you back up, so again, the daily chart looks okay. It looks tradable for a couple points. The weekly chart says, hey, this stock is moved all the way back up to a previous high. Volume over here has been pretty good. If it can consolidate over here in a range and then break out, this is not just a continuation play within an uptrend. This is like a brand new breakout from a weekly chart that goes all the way back to the beginning of 2019. So we're talking about like a 20-month pattern here. So this is what happened. That breakout there, which was in this area, actually did break out, and as of now, the stock's almost doubled. Okay, so what looked like it had limited potential on the daily chart, on the weekly chart, it was like a brand new breakout to almost a 2-year high if you go all the way back to here. And it had much higher potential than just a measured move that went up like maybe 2 points. Okay, next chart, Dow U. I don't know how to pronounce it. It's a Chinese stock. Kind of a mess, kind of sloppy, not exactly a smooth mover. Candles look kind of odd, but and then you get over here to May, stock dropped hard, recovered, and then you get this pretty big move up here that goes all the way back to the previous high. Okay, and there is quite a bit of positive volume here. Okay, so the daily chart looks okay, but it doesn't. The stock doesn't move very smoothly, and it's logically you can say it's consolidating in the area of the previous high, but not exactly the most attractive stock. Okay, so let's back up, look at the weekly and see what it shows us. Here's the weekly covering pretty much the same period. So there's your resistance line. Here's there's the big move off the low, and then here's your consolidation. So while the daily chart looks kind of like a mess, the weekly says, hey, we just got a strong move, strong volume here. Now the stock is consolidating in a sideways pattern just under, just not under, but right in the area of this high over here. And if it can get through here, if it could break out to here, the stock will be at, there's September, so the stock will be at like a 10-month high. Okay, so what looked kind of a sloppy mess on the daily looks pretty good on the weekly. Let's now do an update, and here is the weekly again. So that consolidation took that, it was right here. Okay, so that consolidation area was right here. I said if it can consolidate there and then break out, there it goes, and that's what happened. Okay, its stock has dropped, stock has rallied from the nines up into the teens here. Okay, so what looked kind of sloppy on the daily actually showed on the weekly that, hey, this is a brand new breakout from a 10-month basing pattern, and if we can clear itself from the base, then we should have you got all this open space above. Okay, this is a little bit of resistance over here, but it's long enough ago that it doesn't act as stiff resistance. I look at this as a fresh breakout from a base, and there's a lot of open space above that it can travel into if it can gather a little bit of momentum. So again, another reason to go from one time frame and look out another time frame, because oftentimes that outer time frame, the bigger time frame, clears things up. Let's look at another example. Here's Fiverr. All right, so stock was trending up, was doing all right. You could draw some trend lines in here and see how it goes. Stock's generally doing well. We got a big move here, and then it got crushed in March and then recovered pretty quickly. So as of over here, it's kind of hard to buy that. The big recovery here is notable. You have some big volume bars. But from my standpoint, I'd like the stock to tighten up, trade a little bit more smoothly, a little bit more consistently. I don't like the lots of gaps in here. It doesn't meet my eye test. I can logically say the chart is mostly moving from the bottom left to the top right, and the volume's good, and the stock's up at a high. So logically, it would check a lot of boxes, but it doesn't seem very tradable. Probably because the average volume, one of the reasons is because the average volume is very high. So let's back up and look at the weekly chart. So here's that same chart. And resistance is a little bit more clear here. Okay, so we got resistance at 35. You can see the chart has generally done really well. And if you ignore just this move down and move up, it's generally just moved up very well. You got volume here, more decent volume here. So the weekly chart shows, hey, breakout into open space. This shows, whereas the daily said, hey, this thing's already extended. It just moved from the low to mid 20s all the way up to the mid 30s. Like the move is probably done. Maybe it's got limited upside to go. But you look at the weekly and it's like, hey, this thing might just be getting started. So this is what happened. Here's the weekly chart updated to today. So that base was this. Okay. That dip in March was, just right here, boom, boom. I showed that this was going up generally, and if you just ignore this and this, the chart was generally moving up. But that new high there was to, basically into open space, and now the stock's taken off since then. So what looked like a sloppy mess on the daily showed much more potential on the weekly, and once it got above this area here and it got into this open space, it was there was nothing left to hold it back. It's like once momentum builds, it's going to go and go and go. Let's look at another example. Here's Nautilus. Okay. Stock, let's see here. So it goes down, goes up quickly, slowly goes down, goes up pretty quickly again, starts to tighten up here, and we get a breakout here with huge volume. Okay. Stock is then consolidating at this higher level, and then the virus hits. It takes a hit, okay, but then quickly recovers, and then you can see this big move here. At this point, hard to trade. Okay, how do you buy a stock that on this particular day, you can see right here, was up more than 50%? So hard to get excited about this because we have some big up and down moves. Yes, this chart is starting in the bottom left, and yes, it's up in the top right, and that kind of is somewhat of the definition of a trend. But when I'm looking at this, I see the highs over here, and I'm kind of highs over here, and I'm kind of hoping that if the stock could just move, if the stock can tighten up over here and give me some frame of reference, give me a place to put a tight stop, then I would think it's playable. Okay, so it looks okay, but because of this, because of this big move, I don't know where you'd put a stop, and that makes it hard to trade. So let's look at the weekly now. Here's the weekly, same chart. So there's your resistance at about $4. You can see the stock broke out of a nice base there. Volume. You can see coming off the March lows, volume. And then resistance there. So whereas on the daily chart, this price here was like smashed. Whoops. This price over here was like kind of smushed up in the top right corner of the chart. But on this chart, it's like, hey, if this thing can get above 4 with a little bit of volume, it like enters this open space here. We'd be at like nearly a 52-week high, and the stock should be able to get some more momentum. Okay, this is what happened. This is exactly what happened. The stock did break out at 4 here, moved up, consolidated over here, but between converging trend lines, and then moved up again. Okay, so what looked logically okay on the daily chart, but it didn't really pass the eye test, looked really good on the weekly chart. There's that base. Looked really good on the weekly chart, and you can see it's gone from, breakout at 4, and now it's up at 14. All right, one more example. Here's Linvago. I don't know how to pronounce it. I don't know how to pronounce half these companies. So stock went IPO over here, did really well, lost like 60 to 70% of its value, popped up and mostly traded in a range here. Okay, didn't take that big of a hit in March, recovered quickly, and then rallied all the way back up to its high. Okay, so not bad. So if I'm looking at the stock, I'm thinking this is a strong, stock's done really well. It didn't suffer much in March. It recovered quickly, got up to, a multi-month high over here. I'm looking at these volume bars, thinking this stock's pretty strong. So this is the type of stock that I'm thinking, hey, if it could pull back, maybe get caught by the 21 EMA, I could, it could be a dip buy, and I could play it for a move, from the moving average back up to the high. That's kind of what I'd be looking for. Otherwise, I'd be looking for like maybe hopefully it can consolidate up here in a range for a week or two to give me some frame of reference in order to identify a reasonable stop to play a breakout to a new high. Let's look at the weekly now. So here's the weekly. Shows the same high price. This actually is hard. This kind of identifies why I'd be looking to, I want it to consolidate. I don't want it to either do this. I don't either want it to go sideways for a couple of weeks and consolidate, or I don't want it to pull back and touch some key moving average, and then I trade, and then I play a bounce play. Really hard to buy when the stock's at when it moves up 6 straight weeks like that. Okay, but it does show the potential. It shows the potential with the all-time high there. Now let's look at what eventually happened. So this is what eventually happened. That high was right there. The stock did consolidate for a little bit, but as you can see, it didn't pull back much. You can see right there, we had 1 week where the stock dropped, and then it just took off. It broke out, consolidated over here, and then moved and then continued up. Went from like 40 over here, went up. Now it's up in the 120s. Okay, so if I wanted it to move sideways for a couple of weeks. It didn't move sideways for that long. I wanted to pull back further. It didn't pull back that far. But when you back up and look at the weekly chart and you see a stock that is at an all-time high. Volume here is very good. That's a buy because that enters this entire open space above, and as long as momentum could build, the stock can go for a while. Okay, so what looks decent on a daily chart looks much better on a weekly. What looks like a small move in the daily, has much better potential in the weekly. All right, so to kind of sum up, the point I'm trying to make with these examples is to look one time frame up, because what looks unattractive or unatradable on one time frame often looks very good on another. Okay, if a setup seems to have like 20% upside on one time frame, if the daily has looks like it has like 20% upside potential, the weekly might show 50 or 100% potential. So higher time frames give you the bigger picture and almost always clear things up. All right, thanks for listening. Come check us out at Leavitt Brothers, where we offer market analysis and trading ideas to the financial community. Also, check out my free masterclass in trading at the link below. All right, see you next time.